Warren E. Buffett is a prominent American investor, philanthropist, and business magnate. He also serves as the chairman and chief executive officer of Berkshire Hathaway. He is known as one of the most successful investors in the world and is estimated to have a net worth that is greater than $100 billion. Buffett is a native of Omaha, which is located in the state of Nebraska. Early in life, he discovered that he enjoyed working with numbers and making investments, and he went on to achieve truly tremendous returns on the stock market throughout the course of his career. Warren Buffett has stated that he cannot advise anyone on whether or not to buy equities right now. He believes that saving money is essential, and if you put money in the stock market, he doesn't think it's that essential. He believes that if you are interested in stocks, you should purchase them, and if you have some spare cash, you should buy a few. He implies that he does not believe there is a better way to learn about things than through experience. It's not the same as doing it on paper. Warren Buffett claims that he can guarantee whether you lose money on paper or in real life. It is a unique experience, and he believes that if you do it that way, you will learn more about yourself. He purchased his first stock when he was 11 years old. Actually, he was at Rose Hill at the time, and he bought 3 shares of City Service Preferred at 38%, and it dropped to 27%. Part of life is preparing so that when something major occurs, you can understand its meaning and know what to do with it. And he would say that the first 8 years of playing around, although producing nothing financially, generated a lot in terms of preparing my thinking for when I finally read something that made sense. If you're interested in the sector, Warren Buffett will encourage you to do a few things that he is still trying to make up as intelligently as possible. He would try to stick with firms that he thought he knew. We have an affluent enough society to care for those folks, and we should do so. And how we do it in such a way that they feel most useful in life, and how we do it in such a way that we continue to inspire people to be more productive themselves. And all of that, he means that those are not easy questions. But we should keep sight of the fact that we need to do something about it. Now, what kind of rules would you like to see in place for society? He believes that people should think about social policy as though they know which sphere they are going to get. And he also believes that if you were born in this country, you have already won a good share. However, we should create a system that encourages people to continue working well beyond the point in their lives at which doing so would be financially beneficial to them. Examples of such people include Jack Welch and Bill Gates. We want people who can command such resources to do so. That is how the level of living will rise in the future, and we should want it. So you desire people. You want a system that guides people to their full potential and places them in positions to accomplish the best for society. You also want a system in place for those who obtain the wrong ball. There is an abundance of output. You must have a system in place that motivates people to perform to the best of their abilities and places them in the appropriate location. But you must also ensure that everyone is taken care of. Investing is putting money aside now in order to receive more money later. And how certain you are of receiving that money later on. And if you feel more confident because you know more about the game and real estate than stocks, he tells you to stick to your circle of skills in real estate rather than stocks. Warren Buffett believes that you should play the game you know best, but it all comes down to projecting the asset's income stream and comparing it to the current price. He means that if you acquire oil royalties, this holds true for every type of investment. Warren Buffett believes that if you are in a period of those 40 years when inflation averages 2 or 3%, which he considers being normal, there are no major anomalies in the globe on a macro scale. He estimates that the average business will produce around 7% throughout that time. But investors, if nobody did anything, if we simply all heard Satin bought corporate America together about every share and we never traded with each other, he thinks our group would average something like 7% in that situation when nothing really substantially changed. Now, American investors have been taught that they must constantly move around and that you must sell to the person next year and then must sell to someone else. Frictional expenses are incurred by investors, according to him. You pay them when you acquire a mutual fund. There may be a management fee, a load, or a 1-2-B1 cost. When you acquire individual stocks, you incur them. There are several frictional costs in the system. These frictional costs are likely to total 1% each year for all investors. You can keep them down by yourself. The frictional cost of somebody else's own Berkshire for 40 years has almost resulted. They pay a small commission once and have modest management fees. So it doesn't have to be that way. But stocks are looked at so much like being in a casino for so many people. The American public as a whole will incur these 1% frictional costs. So that 7%, if that happened to be the figure correctly, will turn into 6% for the American public as a whole. And 1% will dribble away to investment managers and brokers and people who sell advice and all kinds of frictional costs. When you put it in perspective like that, 1 out of 7 is a really significant percentage. That would amount to 14 of the profits from the firm. However, he believes that to be the most accurate prediction of what will occur. You are able to cut down on the frictional costs that fall on your shoulders while moving the responsibility of paying large frictional costs to another individual or organization. But if you're playing in an investing arena and you're paying a frictional cost of 2 or 3%, think about what day traders were paying. They were incurring a cost of 2 or 3%. They were faced with the same challenge as you were. You are aware of this, but by doing so, you are giving up a significant portion of the business outcomes that the United States of America will achieve. Because the amount of money that General Motors, Exxon, and American Telephone makes has nothing to do with the amount of loss that will be incurred by all of their shareholders if they continue to switch shares on a regular basis. Because they control the entire facility, when someone trades seats with someone in the room, they both pay a fee. It is best to just sit tight. Companies will make money, and that money will be yours. However, if you move around frequently, it will be the individuals who either counsel you to shift around or shepherd you from one chair to another. Markets will continue to behave in the same manner they have for a long time. Most of the time, they will be valuing enterprises in a respectable range, and they will go crazy on the upside and downside on a regular basis. They went completely berserk on the downside in 1974. Warren Buffett means that if you can't believe how inexpensive major corporations were in 1974, you are not alone. Business is performing well. The Washington Post Corporation sold the entire company for $80 million in the market. It was mentioned in the Washington Post and Newsweek that it possessed 4 major network television stations, one in Washington, one in Miami, one in Jacksonville, and Hartford. You could have stated at the time that you were going to hold an auction of their properties at 2 a.m. in the middle of the Atlantic Ocean. You'd have people show up who would have spent at least $500 million for the same properties. Consider purchasing $500 million in real estate and solid enterprises for $80 million. You know, in our world, there are all these people with high IQ studying finance at major business schools and doing all kinds of things that are worth 1/5 or 1/6 of what the business is worth. The Grahams were clearly honest and gifted. They were in the right line of work. Today, that company, while they haven't discovered oil, has essentially the same businesses. It is now selling for around $7 billion, and yet you haven't uncovered anything. Over a 30-year span, it grew from a $500 million corporation to a $7 billion business. With good management and decent properties, you could have purchased it for $80 million. We own some Berkshire Hathaway and Washington Post stock that we purchased less than $10 million for, and which is now worth $1.2 billion or a sergeant's salary. There was nothing obscure about it. It's just that people go insane. And if you ask me about future financial markets, Buffett will surely anticipate them. He just doesn't know when or in what order. He is unsure whether people will get greedy before becoming scared or vice versa. On the other hand, with the subsequent 30 or 40 years, there will be some very extraordinary oddities. In addition, you need to have the ability to think for yourself at the precise moment. You are aware that the total value of shares on the US market is somewhere between $13 and $14 trillion. It probably accounts for somewhere between half of the market worldwide. Therefore, you don't really have any need to consider what's going on in the rest of the globe. According to Warren Buffett, purchasing Coca-Cola will result in well over 2/3 of your revenues coming from the United States. The same can be said for purchasing Gillette and anything else. Therefore, there is nothing wrong with having the desire to broaden one's universe. On the other hand, if you have ever resided in the United States, you will have a favorable outcome for the subsequent 30 or 40 years. What are your reactions to the most recent statement made by Warren Buffett in this video? Please share your thoughts and comments in the box provided below.